Okay, good morning everyone and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, May 31st. Good to be with you guys this morning. Pete, Pooja, Sarab, Steve, we got the whole crew in the house. We just got the release of the quarterly GDP figures for Canada. These are the annualized. They're at 3.7%. We were looking for a print of 4.2%. Do a quick update on dollar CAD before we get started, see if we're seeing this rock the boat at all. Of course, we've been continuing to hold the weekly opening range. The levels remain unchanged from last week. We'll put this on the list. We'll go over it later this session, but certainly not seeing too much volatility on the back of that release. A little spike there. All right. So, welcome to everyone in the room. Says no audio. Guys, can I just get a confirmation audio is working before I continue? Graham says AV is good. Vlad says everything's good. Okay, it looks like it might just be Sarub. All good. All right, thanks, guys. So to start off the week, we're at some interesting junctures. I do want to note, very, very important, as always, you're going to get sick of hearing me saying it, but it is the last day of the month, okay? You get these washouts sometimes. You just want to be careful. If you're intraday trading, a good time to lighten the load, maybe lower your leverage, cherry pick your entries and exits. I usually am very, very quiet during this period heading into the monthly opens, monthly closes. Keep in mind that you have non-farm payrolls on Friday, so there might be a lot of that washout in liquidity followed by sort of a reluctance to get into any new positioning until you get that release out of the way. So just keep that in mind, okay? Not to deter you from taking on positions, but certainly a time where you want to be a little bit more cautious. So to start things off, here's what the DXY looks like on the menu for today. We'll go over the euro from yesterday, Aussie dollar, sterling Aussie, Kiwi yen. We'll touch on sterling dollar as well. I'll be putting out a piece on that on Daily FX shortly after the webinar today, so we'll take a preview of that. And then I do want to touch base on Kiwi and Aussie Kiwi. Kiwi just keeps ripping. I'm still very cautious, and I still do actually like the concept of some sort of pullback, but I'm not in it right now. So we'll take a look at Kiwi dollar and Aussie Kiwi. And then I do want to just touch base on Euro Aus, which is just below resistance. It's still holding that key level that we highlighted 2 weeks ago, and that's something that I'm also focused on into the weekly start. Crude oil, gold, silver, and nat gas also on the menu for today, trades that we were following since last week. And that's my list. If there's anything you didn't hear or there's a pair you would like to add, feel free to add it to the message board at any time. All right. Vlad, Euro Aus. I just saw your message there. I think I have it on the list, right? Yep. Still holding resistance. And nat gas, I got you. Okay, let's jump right in. Here is what the dollar index looks like. So, pretty clean setup. Looking at the dollar index from last week, it's the same levels, okay? Very, very clean. We were talking about 96.67 into 97.67 into 97.87. Key pivot zone that we were watching on the way down, held as resistance on the way up. It now converges on both slopes that we were looking at, both the near-term slope just off the highs from February and March, and then the broader slope off the yearly highs. Both of those converged right here. We talked about that last week. Beautiful outside day reversal yesterday right off that region. So it keeps the focus still weighted to the downside, sub 97.87 as we came into the week, suggesting with that key support still at 96.47. I know Jamie's been talking about it. I've been talking about it. It's the 618 retracement. It converges on slope support, extending off the February low, okay, right, over the next few days. Let's just say today and tomorrow. So that's sort of the major support for the dollar index. I don't know if we get the low. We were marking some divergence here as we made that low, so I don't know if we get the breakdown. But in the near term, the picture is pretty clear. Why? Well, you have a basic opening range that you never really broke last week, right here. You kind of probed through it to touch that major resistance and came right back below. So now this is this week's opening range. It looks like this is a near-term break, right, of the Monday-Tuesday range. It's Wednesday. It would be a good time, but it's the last day of the month. And this is when I don't really trust the weekly opening range, because is this a washout of the weekly range, or is this just positioning closing into the end of the month? So guys, be careful. Don't go chasing moves today. It's just not like conducive to near-term trading. If you're holding a longer-term position, I really wouldn't get shaken out. Just adjust your stops. But on the near term, it's definitely something to be mindful of if you're seeking fresh new exposure. Long story short, stay bearish below 97.87. Near-term support targets 96.80. That's last week's low, followed by that key structure into 96.47, 618 retracement and slope support. Okay, so the level's still pretty clear on the dollar index. Whoops. Risk, is still weighted to the downside. You might see some chops, some sideways action. I wouldn't be surprised if we see a recovery near the Asia highs again before it corrects lower. Maybe a check of the weekly open, which is pretty darn close to that region. That'd be like 97.45. But the focus remains lower here. Any way you slice it. Questions on the dollar index. Now, my problem with this is that the euro is also coming into a very interesting area as well. And here's what the euro dollar looks like on the near term. So the beauty was yesterday's rebound, okay? And the level that we rebounded off of was a level that we were watching. We had highlighted previously. Here was yesterday's update. And that level was right here at 111.28. In fact, if you go to the previous update on the 25th, that was right here. Key level of support, we were looking for the correction to move lower into 111.28. The bottom of that range was 111.23. I think the low we made was 111.11. And that was sort of a near-term bearish and bullish invalidation. Well, we got a really nice outside day reversal right off support. Dollar index making an outside day reversal off resistance. So obviously, again, everything fits in line. The issue here is on this rebound, it really needs to start making some progress. And again, from a timing standpoint, that's where I start to get concerned, just because we're opening up the month and we're closing, more importantly, we're closing out May right now. But again, really nice rebound. I do have that medium-term trend line. If you look at that gray line there, which is just a parallel extending off of some highs here. You got some play off it. I really don't want to stress it, so I'm not going to really point that out as a major barrier, but momentum looks tired. It's the end of the month. I don't know if you get the extension right now, but the broader trade still remains constructive here, meaning we could get some sideways chop. You could even correct lower into the parallel today as we close out the month, but the broader focus still remains bullish above 111.28 with the top side targets unchanged. So that's been unchanged for the last couple of weeks. 112.85 is a 1618 extension from the advance. Really nice pivot in price. If you look to the left there, back in November of last year, October of last year, even the September high, you couldn't really get a close anywhere near that. And then just above that, a basic 786 retracement of the entire decline takes you into 113.40 or so. And that coincides with slope resistance. So the broader picture for the euro. And intraday looks like this. Here's what it looked like last night. Excuse me. And here's what it looks like now. So we're basically probing channel resistance. You know what I mean? If we open the U.S. trade session, continuing to favor the top side there, you're looking for 112.55. 112.85 is that 1618 on the daily chart that we were looking at. So targets remain pretty clean, still constructed above 111.28, 111.23. That's now pretty darn close to the weekly opening range. So objectively, if this is the opening range break, you want to stay constructive. And that's why on this break here, I would have wanted to see a little bit more thrust. And we're heading into the monthly close. It could just be a throw over, guys, so don't get faked out. If you're looking for fresh exposure, not the time to get long. Okay, if you have a long position on, stop against the Asia lows is how you have to play this at this point. Because if it breaks that, you're heading right back into 111.23. and you do not want to get caught on that drop. Questions on euro or the dollar index? It's pretty much the same trade right now. Looking for one last thrust extension, possibly then to fail somewhere near that 112.85 initially. I would start to look for possible exhaustion, but even then I wouldn't try to fade it. That would just be a target for the long side for the euro. Questions? Going once, going twice. That is euro dollar. Number 3, we'll jump into the Aussie. Here's what Aussie looked like from last night. And here's what Aussie looks like this morning. So it's been a tough call. And if you guys remember, the whole thing with the Aussies that we've been trying to validate, let me get to the daily chart first, whether this is a legit break or not. Now, truth be told, the slope that we've been working with hasn't gotten so many touch points that we should have so much emphasis on it. It really doesn't show up until you get into the 240-minute chart here, where you can see that the slope actually has been pretty clean. Look how many touches that resistance got. Look how many touches that support got. How many pivots. Okay, so another reason sort of multi-time frame analysis can really be helpful in trying to assess whether you're actually on the proper slope or gradient or not. It just so happens that on the breakouts here, this has been pretty messy. So is this, what are we doing with this? Well, the weekly opening range is now set. I'm using yesterday's basic candle as the weekly opening range. And we just failed at the monthly open again as resistance. And here we are pushing lower. So for me, I'm still looking for that decision on whether this thing has made the break of whether this is going to be a breakout and a push higher. 75.40 is sort of the major target we've been talking about in such a scenario. Or this is just a failure and the dollar has to kind of take a breath higher, which would take this one leg lower. That's my favorite scenario. We take one leg lower and then we try to break out. That being said, you got to wait for the break of the range. And the key range that you're looking at is the monthly open, which we checked as resistance just overnight, 74.67, and key support at 74.22. Which is now the objective weekly opening range low as well, right there. 74, yeah, 74.22, 74.15. Basically yesterday's candle. So again, here's 120, and here's what we looked like last night, basically. Same levels. Okay, we highlighted that we were right at resistance. We came right into that. We even tried to push through last night, failed. We're still holding this range right here. So we need to see a concrete break of the 74.67 monthly open or a break below 74.22. Okay? And that should give us guidance on the near term play for Aussie here. I like the concept of a breakout, guys, but you can't get aggressive on the bearish side of the dollar at this point. It's broken down so hard, and Aussie has not been able to make a breach of this resistance. So I'm starting. We got all excited about the possibility of a near-term breakout, especially because Kiwi just rocked it. But the divergence in the two, I think it's something we need to pay attention to. What's the break below? I missed the point. Karthik, can you give me some background on that question? I'm not sure when that, you just put that out there. I'm not sure which one. Break below what? So if we break below 74.22, you're looking for a run into 74. You're looking for 73.60 is what I cited yesterday. That was a swing low from here, and that's where I'd start to be a little bit more cautious. But the weekly opening range is what we're looking at. Right, so that's 74.22, 74.15, this region here. Does that make sense? This is the focus range for now. If this breaks, then you look for the correction play. In that point, I'll give you an update if that's the case, but in that point, guys, and this is way too early, but if that were the case, the play would be sort of a measured move, and that 100 comes right there. That's why I'm looking at like 73.68 as the final target. I wouldn't really be targeting anything beyond that initially, but it's too early. I don't know that this is going to be a concrete high right now. That's just a speculative point for me. Once we break this low, then this becomes a concrete move, like a legitimate target. Does that make sense? Karthik says, yep. All right, cool. All right, any other questions on Aussie dollar? Interesting. Huh. Okay. Well, not bad. That just jumped out. That would also highlight in time sort of a target down here right into the open of the month near 73.69, just in case if we were to break this downside move of the range. Not bad. And also highlights near-term resistance right here at the monthly open. Basic trend lines resistance. Again, this is speculative. It's only 2 point, but certainly something to keep in consideration here. We'll do like that. There you go. Feel free to take a snapshot of this chart if you need to. Same levels, no change from yesterday. Hey, Sandy, great to see you. Hey, Karthik, more than welcome, sir. Okay, next up on tap is Sterling Oz. So this is the other play. I think that'll be a very nice accompanied move here if we do get a final judgment play in Aussie is Sterling Oz. Here's what that looks like. And then we'll jump into British Pound. So Sterling Oz is coming into a major area of support. If you guys remember, here's the update from last night. I just wanted to give you a quick update. This was a highlighted setup from, what was that, Monday night. Okay, here's the daily chart look like. And we were looking at that region right at the 2017 open, which was 71.19. We didn't quite get down there. The low in overnight trade was 71.40. Which was just shy of that 71.19 level. Again, the yearly open for 2017, and then you're seeing a nice little rebound. In short-term price action, there's a nice support barrier there of basic channel support and upslope support. And that's sort of where we bottomed out just ahead of before making the rebound. So at this point, you're kind of looking for guidance from the sterling. From the Aussie rather, because sterling's on its way down. Looks like it's seeing a rebound today, now approaching near-term resistance. We'll go over that in a moment. But as it pertains to pound Aussie, here's what it looked like last night. It was screaming like, watch out, right? Watch out for exhaustion here. So here's what the near-term chart looks like now. It's exactly where we leveled out. Okay, here's the 240. Right into that trend line, right into that median line. Look how beautiful that pivot is. Resistance, 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 support. So it didn't quite get into the 71.19 level, but that's okay because there was some structural support there. That reversal now heading right into resistance. Okay, so from here, boom, right back into resistance. So watch out for 72, what level is that? 72.57. The monthly open comes in at 72.86, both levels of interest for near-term resistance and the weekly opening range high. So if it breaks this level, likely to see a near-term recovery here in pound Oz. That would be Aussie weakness. Okay. So again, the levels are pretty clear. I'm not, again, looking for necessarily anything new on this today into the monthly close, but you know the breach and you know the breakout level of which you need to be mindful of if you're holding any short exposure. As far as the short side's concerned, I would be actually looking for exhaustion if we head back into the monthly open here. You know, it's the bottom end of the range. It's exactly where you would expect to find some resistance. And we'll see what happens as we head into the U.S. Open today. But with it being the monthly close, I'm just a little bit more hesitant. If we do break the downside, like I said, the targets remain unchanged. 170.65, 169.83 would be a basic 38.2. Based on where we are in time, you know, that median line in blue here actually converges on that again, basically heading into the start of next week. So it could stall out for a little bit. Do need to adjust that retracement. And we'll snuff out that 50. Don't need that. There you go. Pound Oz. Sandy says Aussie dollar opens bearish this week, unlike Kiwi dollar. Yeah, Kiwi dollar is sort of a mystery to me. I still, like I said last night, I'm not going to be stubborn and continue to press the short, but Kiwi, I got beef with Kiwi. Let's say that. We'll take a look. I closed my short here. Sandy, you're talking about Pound Oz? A good place was 71.50s into that trendline support. I shorted Pound Kiwi yesterday. Okay. We'll definitely take a look at Pound Kiwi as well. I think that's on the list. If not, we'll add it. Okay, so this is Pound Oz. Let's take a quick segue to what I'm looking at with Pound Dollar. Levels for Pound Dollar. Take a quick segue here. Last pound update is right here. So this was the formation that we added last week. And if you remember, I was talking about it saying, look, it's still a little early, but it looked pretty clean as far as the initial touches here. And then on the way down, we alerted you right as we were coming into it as support. Now we plowed right through it. We came back and tested it literally the next hour as resistance. It held as resistance, giving us further confirmation that this is a slope that we want to pay attention to. Downside came into upslope support. That held on Friday. You saw a nice rebound there. The start of the week, right below resistance, a breach. Again, I'm going to call that a hold for now. Okay, and then again, downside, upslope resistance or upslope support held again. And here's sort of reversal back into resistance. So now you have a really good, well-reinforced weekly opening range. The risk remains lower below the monthly open. Okay, that's 129.50. That's far from where we are now. You could still see 100 pips on the upside in pound before I would start to invalidate the upslope. The risk, let's say, of further declines. That being said, how do you play it from here? Well, here's the daily chart, and this is the concern for me. Is again, you have an outside day reversal off of near-term support. This is the highs that we made from last year in, excuse me, not the year, but last year in December. It's the actual December swing high, and you saw some pivot highs here back in, last month. So outside day reversal, we're checking resistance. Watch 28.50. I guess that's the only thing I could say here, heading into the close of the month. If we settle and close above 28.50 today, yeah, I would expect another rally back towards the monthly open. Like I said, that would take you as high as 29.50. But if this holds as resistance today, this could just be a rebound and you'd look for a resumption. Downside, more key support, a level of which we'd look to reassert a longer term long position, possibly 26.75.27. I don't know if you get quite that low, but that's where I would be looking in time right now. So for the pound, heading into the U.S. session today, you want to take a little bit more of a neutral stance. If you put a gun to my head, I'd be interested possibly fading a pop into 28.87 again, just on account of where we are with this slope yet again. But I mean, ultimately, you're looking for a drop into this key region. I think that's sort of the sweet spot for me. This is one of the reasons I've been highlighting Pound Aussie, because I think it's a better option if we do finally get a clear-cut directional play in the Aussie, which I think is forthcoming. I think that one will be the better pound cross, rather, to play. Now, I'll take a quick segue. That was number 5. Any questions on sterling? You're free on sterling data for the rest of the week. So the key is going to be the election. There were some polls that came out that showed that the Conservative Party is actually, they're losing ground, which has been a concern. You saw the pound sort of make some moves, but at the end of the day, guys, we're guided by price action. We're still in the weekly opening range. If you watch CNBC this morning, they keep on talking about the pound, losing all this ground. It's actually up on the day. So I understand, just understand we're going to continue to watch price action. It's always the most important thing. Let's take that segue into pound Kiwi. That's number 6. Another trade we've also been tracking. I just want to see where this one is. Sandy, you've sparked my interest here. A little precarious. So if you remember, 83.48 was the break that we were talking about for a while. That was obviously sort of the onset of the spill down. From here, I'm not thrilled about the fact that we don't have a level per se that's holding this up. Oh, that's my fault. What high is that? Okay, so that's the December high from last year, similar to the one that we were looking at. Okay. Right here. Okay, you've got some divergence into the low. Weekly opening range high is basically what you need to pay attention to here. So Sandy, good call on that exit for the short position there as well, I think. Initial resistance you want to be looking for basically right into the weekly open. It's a nice pivot in price. Okay, former slope resistance. Not going to really stress that, but if you look at this slope that we were looking at last week, nice pivot on the median line. The break did actually offer resistance as far as that slope support. That also is just a little bit higher. So watch this near term on the rally. Obviously a break of the weekly opening range, like I said, that's what's going to be the determining factor. So a bigger range trade, right? 82.26, your target would be 83.50, a little over 100 pips to the upside. That would be the initial target. Honestly, it would be really this, the median line off the low. And by the way, if this were to break higher, and that's on a Kiwi breakdown, which we'll look at Kiwi dollar next, you would want to take on this retracement, which would put the 50 pretty close to that, right? 84.75 right here. So I'm just working the levels with you guys. I don't want to crowd up this chart at this point. I'm just working the levels with you live. But basically, that's sort of the game plan. If we were to get some sort of rebound, that would only be validated. You would want to get out of any short exposure above 81.20. But if we break 82.26, that's sort of what you'd want to shift your focus near term to recovery back towards that median line. Other than that, this is still the near-term resistance and near-term bearish invalidation. Okay, downside targets, you're looking for that run into the 2017 open, 50% retracement. It's basically 78.30 zone. Questions on Sterling Key? Nice, 100 pips, says Sandy. Good stuff. Yep, we'll go over oil and all that in just a moment. Any questions here on Sterling Kiwi? That's number 6. Number 7, let's go ahead and segue into Kiwi dollar, okay? I'm not a really big fan of it right now, and then we'll do Kiwi yen from last night. But I'll show it to you anyway. So, you know, here's what we were looking at with Kiwi dollar last week. And we were talking about 70.90, the 71 handle being a big zone of resistance. That's kind of where we want to start to look for exhaustion, specifically 70.73 into 71. Both really key areas of resistance. So we're dilly-dallying there now. It's structural resistance on the near term. I'm not going to, advocate, again, calling for, the high, but you're seeing exhaustion and momentum. I wouldn't be able to advocate taking a long position at all at this point. But near term, I do think you're still at risk for exhaustion. And the exhaustion pullback would be a target right into the weekly open, former trendline support. Or former trendline resistance, rather, should offer support. And then this would be the judgment call on whether this breakout is real or not, and you'd look to reassert sort of a larger rally in Kiwi, possibly. But this was a big spot. This was a big spot. If we hold above 71 today, I don't know, guys. Again, I can't advocate trying to fade a breakout rally, even if the near term we're at resistance. But keep in mind that near term you are at structural resistance. This slope has been pretty nice in calling some pivots. The median line, look at this slope, offered support, extended off the high from that May open. There it is. By the way, what a beautiful May opening range break. And for those of you who may be new to the opening range concept or just looking for a review, this is the ideal opening range. Okay, this is a perfect example. Here's your May open. You set a low. You make a new high. You check the lows, it fails. You check the high, it fails. It's now the 10th of the month. You have a very clear-cut range. A slam lower takes you into long-term structural support. So even though we did attempt a break of the monthly opening range low here on the 10th, you knew, and we were talking about 68.28 for weeks as being a major key level for Kiwi. Well, that held. Once the opening range broke, it was late in the month on the 22nd, you look for an extension into a late month high, and it's the last day of the month, we're at a new high. So it's not very often that you get an opening range that's quite this clean, but certainly a great example of how to use these to your benefit. Last month was a similar play in that the opening range broke on the 26th, and again, you slammed lower all the way into the close of the month. This month was the exact opposite play. So we're at highs. Watch out. Near-term resistance on the pullback. Again, if we start to correct lower and you break the Asia lows, a basic retracement, a basic 236, would come in right at that same region of former resistance, which is why I would say the monthly open or the weekly open would probably be the first target at 70.60 for me, 70.63. Just lower, you'd have that basic 236, and that's now where you want to keep your near-term support. Okay, it's too early to use this retracement. Again, I have no way of validating that 71.22 level is a high, so I'm not going to leave that on the chart, but just to give you some reference on what you'd be looking at for a correction play if we do see some exhaustion here. Okay, questions on Kiwi. The breakout level for the top zone, if we do push higher, 71.62. That's the 618 retracement of the entire decline from the highs that we made back in February. So in essence, that takes into account the entire yearly range. Okay, that's right here. So you can kind of see where I'm coming at here with some of the Kiwi crosses. Now, if we take a step, any questions on Kiwi dollar? At last month's high and MR2, so it should pull back a bit, says Sandy. That's awesome. What did you say, last month's high? Yeah, MR2, that's awesome. So more pivots on that. Let's see if we can find a hold here in Kiwi dollar. Also note on the daily chart, this is also something that we highlighted last week, the 200-day moving average. On these types of technical indicators, it's all about the close, right? It's all about the close. So if we hold on a close basis sub that 200-day moving average, that's a start for near-term exhaustion. Into the close of the month, as we open up a June trade, it'd be too clean. It'd be too clean to get a washout up here. But that's kind of what I'd be looking for. Questions on Kiwi? All right, let's take one back step to last night's update on Kiwi Yen, another trade that we've been following. I kind of just wanted to give you an update on where we were into the close of the report. And the reason was, it's just because the weekly opening range is ridiculous on this. The level's so super clean. So the initial trade or the initial update that we did on this was earlier in the week, and it was just highlighting the fact that, look, we're at resistance. 78.52 into 78.90. I'm sorry, 78.75 into 78.90. 15 pip range of key resistance. Also capped last week's advance. It was also this week's opening range high. Watch that for resistance. Near-term support right there. You had the lower parallel. You had a basic 38.2 retracement of the advance. You had some really nice clear-cut pivot action in price. High, break, support, break, Nice little pivot there. Once we broke, acceleration, converged right on near-term support. Came right into that level, rebounded, round trip, right back into the weekly opening range high. So very clear-cut levels to play with. On a breakout, if you break to the downside, nice play down to 77.46. It's a healthy range. A 618 retracement, just adjust that to the new high, would take you to 77.30. Again, that's where slope is, and you start to look for a rebound or for some exhaustion on the short side there. But near term, you're checking resistance. If we break higher, we're in an uptrend, so I'd much rather be buying these pullbacks, to be quite honest with you. But if we do break that low, you know where to go as far as looking for the next possible long entry. If you're quick enough on the short, if we rebound higher, you have an opportunity to play that decline. But the focus right now is on this key range. If we break out, I'm not looking to play that unless we get a pullback into support again. But the targets would be 79.36, 79.71. Too much. Start that. And one other, actually. Bear with me one moment, guys. I want to just see what this looks like. Yeah, I don't know if... Oh, that's not bad. 1, 2, you got a touch point right there. We could leave this on for now. I don't want to crowd up the charts, guys. And again, we kind of made a really weird pivot along the median line here, but further highlights near-term support basically into the lows, and near-term resistance right at the highs. So either way, look for a break of this near-term range for guidance. We'll come back to this slope. I think it's a little premature. Any questions on Kiwi Yen before we move off? So if Kiwi is exhaustion, the pullback, you'd look for this resistance to hold here. Moving right along, Aussie Kiwi, number 9. Here's what Aussie Kiwi looks like. So on the daily chart, the major premise, we talked about that multi-year slope of influence for Aussie Kiwi. Obviously, the break saw major acceleration, which is another reason why it pays to leave these long-term slopes sometimes on your daily chart. Because when you see those breaks on the daily close, guys, you'd expect to see some sort of acceleration in trend, some sort of reaction in price, and certainly once we got that break, that's exactly what we got. We reacted to it very strong early in the month with this rebound here, confluence support, again, that major long-term parallel, and then on the breakdown, acceleration lower. That's exactly what we want to see. So on the decline here for Aussie Kiwi, right, you're basically still coming into slope support right now, which is why I can't really, it's a bearish trend, and you're testing a break of the weekly opening range lows, but do you see how it looks on the intraday chart? Much more ominous of exhaustion than it does on the daily, right? On the daily chart, it looks like, well, hey, if we close below this, continue to look for the drop into that key support zone that we've been looking at near 104.35. Sure, that's the game plan, but how it looks in near-term price as far as the momentum signature, here's the 120 looks like. The fact that once you broke the opening range low, now you're teetering and kind of really getting quiet, the move is not accelerating lower, has me again thinking end of month, this thing might just be a false break and a whipsaw higher into the U.S. trade session. Be careful, okay? If you're positioned on the short side, a stop against the weekly open, and you're still looking for that drop into 104.35, just choke it up into 104.40, that 5-pip range there is where you're looking for initial support targets, the 104 handle being the near-term lower end of the slope here, and former swing lows former swing highs from back here. I'm sorry, that's what the initial target at 104.30. So that's the first initial major break, but on the near-term slope, you have that 104 handle right there. So again, gunshot, 104.90. You want to stay bearish below the 105 handle essentially immediately. Near term, 104.35. That's the major support you're looking for on Aussie key. So could see another leg higher in key. Could see the break lower in Aussie really fuel that last drop into 104.35. But that's the level of which I'd be much more mindful of holding short exposure. And at the end of the day, if we do pop higher above the Asia highs, you're probably going to see a recovery back towards near-term resistance, and that still takes you basically into the weekly opening range highs. Larger range there for the weekly open. But at least the structure is super clean. So again, here are the near-term targets for Aussie key. No change. We're basically probing a break here, and your next downside target would be, like I said, 104.35. Questions on Aussie key. Going once, going twice. That is number 9. All right, let's take a quick jump into some of, did we not do Euro Aus? Let's do Euro Aus real quick, and then we'll jump into the commodities. So we got a fix on Euro. We got a fix on sort of what we're looking at as far as the range of influence for Aussie. Euro Aus also just teetering on key resistance. Again, a trade that we've been watching for a while. Here's the last Euro Aus update, just to kind of pick your brain and just show you how stubborn this thing is. It was on the 22nd. Here it is. So Euro Aus on the daily chart, we were highlighting major key resistance into 105.46, 151 even. 150.46, 151. Big region. You had slope resistance. You have a 1618, 50% retracement. The long side's at risk as you head into this region. You had a while where, or a week, here it is on the near term, where you kind of just pulled right off that on every rally. Pulled right off that on every rally. Pulled right off that on every rally. Here we are again, heading into the monthly close into the high. Shouldn't be a surprise because we broke the opening range as ugly as it was to the upside. But again, into 51, you want to use some caution on the long side of Euro Aus. This is still the breakout sort of zone. If we were to clear this, you're looking for a tag of this long-term slope resistance. I'll show you in a moment. But at this point, you want to watch out. So here's what Euro Aussie looks like on the daily chart now. Again, we're pushing into that same zone. This is basic trendline resistance off the highs for 2015, 2016. Take a parallel off that secondary high from, what was that, September. You saw some play there, early 2016. Cap the advance earlier this month. It also converges on this same region of upslope resistance and the 50% retracement of that entire decline. So it's a mouthful. Sorry if it took so long to get out. But there's a lot there. So we'll move this red circle here. And the monthly high is still governed by that key resistance zone. Keep in mind, that is the monthly high. What was the stretch high here? 151.10. 151.06 is the actual, 50% retracement. So watch for Euro Aussie. This is either going to be an exhaustion play here on Euro Aus, or if we close above this and it's a breakout, you've got a lot of room to play. Slope resistance, the actual slope off the highs doesn't even come until like the 53s. So that'd be another 200 pip rally. Any questions on Euro Aus? Here's what the intraday chart looks like. Okay, we never tacked on the retracement, again, because we never got the reversal lower, so we never had any type of conviction for the playback, but that would be with a break below 49.14. That's the level that we highlighted that continues to be the major key interest area of support, and the area of which compromised would be the onset of a more significant, more meaningful pullback in Euro-Aus. As long as we stay above that, guys, a pullback into that region, that's where you want to close the shorts, because that's the pivot. You know, unless we see price dip below, that's still sort of your near-term bullish invalidation level. Also, objectively, the weekly opening range lows come in just above. So again, another trade that's super clean. The directional bias is still range bound, so until the range finally gives out, it looks like it's trying to break today. You still don't want to play the long side here unless we clear 51. Questions on Euro-Aus? Going once, going twice. Since you are on Euro-Aus, if you can do Euro-CAD, that would be great. Steve, I got you. That was number 10. Number 11 will be Euro-CAD. I haven't looked at it today, but let's take a quick gander at what that's doing. Okay, looks also like it's tempting a break of the weekly opening range highs with this move, a near-term downslope that we've been following. Interesting. It's a Euro-CAD breakout. Bear with me one sec. Well, 100 off the high would take you into a level we were watching anyway, which is 51.50, 51.53. It's another 30 pips to the upside there. Okay, so just to start off again with the broader reference of where we are in Euro-CAD, this is a trade that we haven't updated over the last couple of days, but we have been following. And it actually came off a beautiful resistance level, if you guys remember. Sorry about that. Here's the last update on Euro-CAD. Okay, so we're just dribbling below that 2016 open. We're seeing a little bit of a rebound. Near-term charts, we're following this. Okay, and we basically came into that 618. That held as resistance. Actually, it was right over here in time, so it was a perfect tag. And then here's the breakout to the upside of that 51.51 level. Is what we'd be looking at for this target on the move higher. So yeah, I think the immediate risk on this, Steve, would still be for a move higher into that 51.50 target. It's the same levels that we were highlighting on this update from the 24th. So if you go on the intraday charts, those are the same levels. And in fact, 100 off the low that we made for the week would take you right into 51.50 anyway. So first level of resistance, key resistance still 52.20. Nothing's changed on the daily chart. That is still critical resistance. Okay, 50% retracement of the entire decline from the highs we made last year. Slope. Okay, this slope has been very fruitful as far as both acceleration on the breaks, the gap higher held. That same slope extending off the highs from what is that, May of last year, converges on near-term slope too. Steve, make sense? That is number 11, Euro-CAD. You're more than welcome, sir. Okay, quick jump into some of the commodity block here as we start off the week. There's been a lot of noise about what's been happening, but the levels have been considerably clean. I'll start off with crude. My least favorite, interestingly enough, even though we sort of nailed the high last week, at this point, I don't know. I don't know if people want to chase this any lower. I'm looking for a drop into 47.85 would be a basic 50 off the high. Also, if this is just near-term correction, when you do this, The 100 comes a little bit lower beyond that 618, which was the level that we highlighted last week. 46.88 into 47 is key support. Just lower comes in 46.45, which would be a little bit better of a correction sort of target. So in time, if this kicks out further into next week, this decline, that's sort of where I'd start to look to favor actually a little bit more of a long type of position. But as long as we stay below 49, at this point, I want to say 49.17 would still be my near-term bearish invalidation. You know, the start of the week, as long as we stay, as said, as long as we stay below 49.90, you want to stay bearish. You kind of probe through it real quick, but that largely held, that key zone. And then the push lower and break now is targeting 47.85. So still looking lower in crude. You know, immediately, just because of these swing lows here, you might see a bounce into the U.S. Open, but, you know, largely below, like I said, that 49.17, 49.16 region. Kind of want to still look lower. Questions on crude? Karthik, we can cover Brent. You just need to give me a day's notice, actually. I don't have any analysis whatsoever. It'll be from scratch, and we're 10 minutes in the session. So I'm usually more than welcome to start anything new, but from scratch setup is going to take me a while, Karthik. So we'll go through it tomorrow if you'd like. No worries. A quick through on gold. Here's what the gold chart looks like. The only thing I wanted to highlight here is the key resistance that we talked about last week is still sort of the focus. That's the monthly open, 1267 into 1264, the 618 retracement decline off the yearly highs. Beyond that, there's really not much to look at, guys. That's the resistance that you need to focus on for gold. No ifs, ands, or buts, period, end of conversation. And now you have to also highlight the fact that the weekly open comes in right there at 1266 in the middle of that range. So there's a lot lined up here. I haven't updated these levels, obviously, from last week, just showing you how it kind of panned out. This was obviously the major resistance that we were looking at. We had to clear 1271 to get bullish. It kind of went for a tag of that, failed, and the break the break yesterday rather, of the weekly opening range, the initial weekly range, in my humble opinion, still keeps us looking lower. So I'm not really looking to do anything on the long side of gold from these levels. I'm actually still looking for a possible correction lower. At that point, you would look to reassert a long position because I do think that gold has more upside. But I'm still mindful of a possible exhaustion pullback here. All right, questions on gold? Moving right through silver, another trade that we were following here in the room. Very similar scenario. The near-term picture is getting ugly. This one still is in, its weekly opening range, very clean. So as far as the levels are concerned, you're still wondering if topside exhaustion is in play. In silver specifically, it's been sneaky. And I kind of think it's not like gold in that you're at a major critical resistance region. You are from a Fibonacci standpoint. And I always tell you, these are always my favorite plays when the extension off the low converges on a major retracement off the high. So here's the retracement, the 50%'s here, the 100's here. You overshot it by a little, but largely speaking, that held as resistance, right? From a structural standpoint, though, you could see a scenario where this thing pops into the 618, and then through that, you basically have to go through, a tag of the 200-day moving average, 618 retracement, and then the pullback for me would be much more like crazy exhaustion. I just don't know if you're finally going to get that stretch. So for silver prices, you'd need to kind of see another dollar break lower to get that stretch higher. If you break the monthly open as support, which has been holding as a very decent pivot, you'd look for that playback into 17, and that's key near-term support for silver prices. So opening range intact. The play for me would be the pullback here and look for long entry down here, or if you exhaust into 1764, a short off there. as long as you hold this range, do respect those levels. Questions on silver? We did Euro CAD. There's 11. Oil was 12. Gold was 13. Silver is 14. Nat gas. Here's what this trade looks like, Vlad, for nat gas. So we talked about the break below 318 last week. That was the level that this thing needed to clear. Mindful of the fact that you had the monthly open, a 236 retracement of the advance off the yearly low, basic former trendline resistance pivot, now support. All of those converged on the lower parallel for this formation that we've been following off of the yearly lows, so modified pitchfork. You can see at the 50 line caught the high really nice. The median line caught some pivots there. The lower parallel, some support. That converged. All of that was 318 into the monthly open. Once we broke below that early, or I guess this is on the 29th here, you pretty much just solidified a break of that key support zone. Okay, downside targets, basically you're looking now at slope. Here's the daily chart, extending off the lows from 2016. Here it is. Boom, boom. Although you did see a break here, the resistance held when it tagged it again. Then when we broke, we saw acceleration. We're testing that same slope now as support. So initial support here on nat gas, but what I do want to mention is this was an objective break of the monthly opening range. So yeah, that keeps the focus lower into the end of the month. Today's the last day of the month, and we're at support. So I wouldn't go chasing it. Wouldn't go chasing it again to the downside. I'm sorry to be so iffy today, guys, but these end of the month flows, really from a near-term prospect like me, I've gotten wrecked on these kinds of days. So I just try to keep the powder dry. There's a lot of clean setups in play, but you just want to make sure you're being very mindful of these longer-term slopes because the rebounds can just take out the whole day's range. And you basically get in at the low trying to short it, and you're just smoked. So guys, just be careful. That's a long-term slope. We've seen very clear-cut pivots, okay, needle point pivots right off that slope, and we just tagged it as support today. So that's why I'm looking at this daily chart. Obviously, that multi-year slope is not going to show up per se here. I don't think I have it here on the 240-minute, but you'd need to clear 306 to the upside to get a decent pivot for a recovery. Let me clean this up. Let me clean this up. Okay, so possible near-term slope support. I also just want to see what this looks like. Okay, so the 50 line, not bad. Support. Ooh, even better. Okay, so an embedded near-term downslope support, longer term, taking into account the April high and the April low, I guess, that late April low and last month's high or this month's high that we're currently in, will give you a decent slope that has offered some play, and that 50 line converges on the lower parallel. So another reason just to be mindful of nat gas on the short side, and again, on a rebound play, the median line would be initial resistance. Okay, I'm going to get rid of some of these retracements. Clean this up for you, Vlad, just a moment. You know what? I don't even want you to stress that 100 at this point. If we break your 618, your 1618 would probably be the next extension target that would be sort of key to look at. Okay, that's down to like 291 on a break lower beyond here. You're at support right now. If this rebounds and takes out this high specifically, then you want to tack on this retracement. It's too, again, I'm drilling with you guys here. It's too early to tell if that's going to be the play. But I would expect the 38.2, there it is. In such a scenario, you know, your risk would basically be back right to the monthly open, 317 to 319. That being said, watch for a reaction here at this level as we enter the US Open. That's near-term support. Vlad, does that help? Questions on nat gas before we move off? That was 15. Before you go, can I get a look at your dollar CAD chart? Thank you, pal. Going to take a pic of it. I'm up 50 pips since your webinar started with the pair. Kelly, let's take a look. So here's dollar CAD. Oh, it started making a move, huh? Yeah, as soon as I leave the chart, obviously, dollar CAD starts to make a move. Here's what dollar CAD looks like at this point. You're checking basic slope resistance from that high that you made back on the 11th of the month. Look, if you break higher, the monthly opening range, or excuse me, the weekly opening range high comes in just right at that basic slope. This is just a parallel extending off the highs, but the pivots off this has been pretty decent. Support, support, support. I don't know if you want to call that resistance, didn't quite get there, but it converges basically on the weekly opening range high. So let's just call it 3506 or 3505. So the first area you'd start to look for on the target to the upside. 3540 would be a basic 38.2 of the advance. But you're coming off slope support. Here's what the 4-hour looks like. Feel free to take a snapshot of that. Sandy says, yeah, 30 pips, big move. I guess for the range that we've been in, Sandy, wouldn't be too surprised if we do get excited over a move like this. Let's see if we can't get this pop higher. Here's what the 120 looks like. And again, if we do clear that high, yeah. So initially watch that median line, but then 3542 into 3552. Nice little pocket range there I'd be looking for. All right, so dollar CAD, clear view off of channel support. See if we can't get that rebound higher. Ultimately, I would like to get back on the short side of dollar CAD, but I do think that the rebound off of channel support here could be a near-term play. Here's what the daily chart looks like. I haven't amended this yet on the intraday charts, so we'll have this updated for you as well. Again, basic slope support. Nice reaction. Hold above the 2017 open, and a failure to hold a material close on a dip below does suggest that you see a little bit of a rebound here, a near-term exhaustion rebound in dollar CAD. Okay, and that coincides, with some CAD weakness, possible move lower in crude, which is what we've been talking about. I think so, Horace. I think so. I think you get a pop. Dialed in, thank you, and appreciate it. And making pips is big. LOL, says Kelly. All right, Kelly. Well, guys, great to be with you, obviously, as always. I'm going to wrap it up here. I'm over on time, as always, as well. But I will be back tomorrow, 8:30 Eastern, to close out the week. And hopefully we got some fresh plays to open up the month. Be cautious and be nimble. We're heading into the close of the month. There's no need to mess things up. You also have non-farm payrolls on Friday, which is going to obviously be a nice dollar mover. So for some of these dollar crosses, hopefully we get some clarity on it. Watch that Aussie dollar range, something I'm watching very closely. Nice pips and have a nice day, Mike, says Karthik. Same to you. See you all tomorrow morning. Cheers.